Hi guys, welcome back to the class and we were doing board meeting. We started with few sections. Let's quickly recall whatever we have done. Then we will proceed further. Okay, we started with section 173. 173 was frequency. 174 was quorum. 175 was resolution by circulation. 176 was defects in appointment. 177 was pending. 179 we did powers of board. Then 181 charitable contribution, 182 political contribution, 183 national defense fund. This were the section what we have finished. I hope you have understood the concepts. See, basically it's very simple concept. You just have to understand the concept, write the answers, take the answers in the exam and clear it out. Okay, let's proceed further. Now we are in section 180. Now see, if you remember section 179, powers of board, 14 powers were there. 11 were in section, 3 were in rules. 11 section में 3 rules में, correct? Now we are in section 180. It says restriction on powers of board. So these are also the powers of board of directors, but there is a restriction. These powers are also of the board of directors, but it is restricted. Restricted means, sir, it can be passed by SR, it can be passed by members. That means there is a limit. If it is up to the limit, it is board ka power. If it goes beyond the limit, it is members ka power. Okay, if it is up to the limit, it is board ka power. If it is beyond board ka power, then it goes to members. Members will do it via SR. SR means special resolution. That means members have to give 75% approval. So there are 4 powers. First power, to sell, to lease, to dispose. To sell, to lease, to dispose, either the whole or substantially the whole of undertaking. So they have a factory or they have a building, they want to sell, they want to give it on lease, they want to dispose it of. That means they want to destroy it out. Okay, it is the power of SR by members. SR by members is required. So what does undertaking means? Sir, undertaking means a unit or a branch or a division where the investment is more than 20% of the net worth. That means total net worth may say more than 20% they have invested there, or the income is minimum 20% of the total income. That branch, that division is giving minimum 20% income. Okay, so what it is the first power of the board. So to sell, lease, dispose either the whole or substantially the whole of undertaking, you require members ka power, members by SR. Sir, undertaking means a branch or a division or a unit where, like for example, if I say this is my branch, oops, Babu, yeah, this is my branch or a unit, wherein we have put the investment, wherein we have put the investment which is more than 20% of my total net worth. So out of 100 rupees, 21 rupees is invested in this undertaking. So this undertaking becomes a very crucial undertaking. Board, you want to sell it off, you want to put it on lease, you want to dispose it off, you can't do it. It is the members by SR. Whose power it is? Members by SR. Number 2, sir, income where which generates more than or equal to 20% of total income. This branch, this division, this unit is generating minimum 20 rupees. Then boss, board, it is not your power, members will do it by SR. Okay, number 2, to invest compensation received by MA. To invest compensation received by MA. MA means, sir, merger and amalgamation. So whatever compensation they have received by a merger amalgamation, board, you can't do it. It is a power of the members. Members by SR. Members by SR will do it. Oh, if you want to invest in trust securities, so trust securities means, example, Kisan Vikas Patra, Rajiv Gandhi Vikas Patra, Indira Gandhi Vikas Patra, all these patra are very secured, very safe investment. You want to do it, you do it. Board, it is your power. So general, it is members by SR. Exception is trust securities. If you want to invest the compensation received by merger amalgamation and you want to invest in trust securities, then you require, then board, you can do it. then board you can do it. Okay. Third. Oh, third power I have not written it. I am reading first D for you. D. Okay. This is just check. Okay. A was there. B. D. To remit or give time for repayment of a debt due by director. To remit or give time for repayment of a debt due by director. So director have taken the money. He is unable to give. He is asking for more time. So you want to give extension of time, or he want remission. Remission means partial waiver. Okay, remission means what? Partial waiver. So boss, you can do it. Sorry, board, you can't do it. Whose power it is? That is members. Members by SR. Members by SR. Members by SR. To remit or give time for repayment of a debt due by director. Okay, we require SR. We require SR. Okay, so A, B, D. So in the exam, in generally, they ask C. Okay. Sir, what is C? To borrow money. 1 second. To borrow money. So borrow money was in 179 also, if you remember. Borrow money was there in 179 also. Here also borrow money is there. But same logic. Up to the limit, board ka power. Beyond a limit, members ka power by SR. Sir, what is borrow money? Sir, first you will take the limit. How do you calculate the limit? You will take paid up share capital. Imagine 100 rupees ka paid up share capital is there. Add, you will do general reserve. Add, you will do general reserve. Add surplus in P&L and add securities premium. Okay. So 100 rupees plus 50 plus 10, 160. So up to 160, up to 160. If board wants to borrow up to 160, boss, if borrowing is up to only 4, like up to 160 rupees, no SR is required. That means board ka power it is there. Check how much they have already borrowed. Imagine they have borrowed already 30 rupees. So my total limit was 160. I have already borrowed 30. How much is my balance? For the long term borrowing up to balance, that is up to 130. Up to 130, no SR required. Up to 130, no SR required. Boss, I want to borrow 135 rupees. 135 rupees. It is beyond board ka power, then you will require SR. Then you will require SR for entire 135. Entire 135. Again we do. Sir, first you will borrow money. How much is the limit? You will calculate. Paid up share capital. Add general reserve. Add surplus in P&L. Add securities premium. Okay? Total is 160. If borrowing is up to 160, question says they want to borrow up to 160, it is board ka power, not members ka power. Okay? No SR is required. Check how much they have already borrowed. In the question they will give you, okay, they have borrowed long-term loans of like 30 rupees. How much is the balance? So 160 was my limit. 30 I have already borrowed. How much is my balance? 130. So 130 up to borrowing up to 130. Borrowing up to 130. Borrowing up to 130. Board ka power. Okay, they want to borrow 135. Member ka power for entire 135. Entire 135. Okay. Members by SR will do it. Okay. If the question says temporary loan, in case of temporary loan, no SR is required. They are saying that 135 rupees is the entire temporary loan. 135 rupees is beyond the limit, and the entire borrowing is what? Temporary loan. Then no SR is required. Sir, what does temporary loan means? A loan which is repayable on demand or repayable within 6 months of making loan. Loan which is repayable on demand or repayable within 6 months of making loan. Loan which is repayable on demand or within 6 months of loan. It is called as a temporary loan. So question specifies the entire money is temporary loan. Entire money is temporary loan. No SR required. No SR required. Then SR should specify the max amount the board can borrow, else it will be void. That means whatever SR you have passed, like for example we are saying 135 na, so 135 tak you can borrow. So they should specify, the SR should specify the amount. Boss, SR should specify the amount, else the resolution will be void. If board borrows sorry if the board borrows in excess of limit, the member can ratify such excess borrowing. Sir, ratify means subsequent approval. Imagine the limit was 135 only. The limit was 130. The limit was 130, but they have borrowed 145. 145 rupees they have borrowed. So it is beyond the limit. So members can come later on and they can give subsequent approval. It is called ratification. So your prior SR is not there. Here only SR is there. Here only SR is there. Prior SR is not there. So after transaction, after taking loan also, after borrowing also, you can take the approval. 181C is not, 181 is not applicable to private company. That means private company can borrow any amount without any resolution. Without any resolution. Understood? So there are 4 powers A, B, C, D. A is about selling, leasing, disposing of. B is about compensation. D is about remitter extension time. C is about borrowing money. Borrowing money is very important. You need to calculate the limit. How do you calculate? Paid up capital plus securities premium plus free reserves plus surplus in payroll account. Up to that limit, if you get the answer, no tension, board your power. It goes beyond, you require SR. Okay, even though you have passed the SR, sorry, even though you have borrowed it, SR was not passed, subsequently you can ratify it. That means subsequent approval is allowed. Subsequent approval is allowed. 181 is not applicable to private company. Cool. 180, very important section. Take your own sweet time and read. Read slowly. Okay. Anish? Now, next section is 177. So 177 and 178 both are linked. It is about audit committee and NRC, nomination remuneration committee. So 177 talks about audit committee, 178 talks about nomination and remuneration committee. Now what is the difference? Understand. So in a company what happens? So the directors are there, they run the business, they are accountable for financial statement also. Now auditor have some query, he can go and disturb all the directors. So rather than disturbing all the directors, see, directors ko obligation is there to give information to the auditor. Auditor has a right to ask information from the directors. So rather than going and disturbing all the directors, what they will do, out of 7-8 directors, 3-4 directors, they will put it in one department. That department is called as audit committee department. Auditor, if you have any query, don't disturb all the balance directors. Go and disturb only the people who are there in audit committee. So audit committee people are not outsiders. They are come from the company itself only. They are the existing directors only. So from the existing troop of the director, few people we have taken it out in a committee. It is called as audit committee. Audit committee is not applicable to every company. Audit committee is applicable to every. For sure it will be there in the exam. It is applicable to every listed company and unlisted public company. In unlisted public company, you check 3 things. Paid up share capital should be more than or equal to 10 crore. When I say more than or equal to 10 crore, it basically means minimum 10 crore, or turnover of minimum 100 crores, or loans, borrowings, deposit, debentures exceeding 50 crores. Paid up capital minimum 10 crore, turnover minimum 100 crores, loans, borrowings, deposit, debentures exceeding 50 crores. Now all these data, of which date you have to see? As on 31st March. Last year ka 31st March. All this data have to be seen last year ka 31st March. So it's applicable to every listed public company. Number 2, it's applicable to unlisted public company. Unlisted public company mein capital minimum 10 crore or turnover minimum 100 crore or loans, borrowings, deposit, debentures exceeding 50 crores. As on 31st March have to be checked. Now, if you are an unlisted public company, but you are what? You fall in that limit, capital ka, turnover ka ya loan ka. But you are a joint venture or a wholly owned subsidiary or dormant company. You are exempted. Joint venture, wholly owned subsidiary, dormant company. 3 companies. If you are unlisted company falling in this data, but you are a joint venture or a wholly owned subsidiary or a dormant company, you are exempted. You are a joint venture or wholly owned subsidiary or dormant company, you are exempted. So this answer is basically a 3-4 mark answer in the exam when it used to come as a descriptive answer. Now probably for objective type or MCQ type they can ask. It's applicable to every listed public company, unlisted public company. Unlisted public company mein capital minimum 10 or turnover minimum 100 or loans, borrowing, deposit, debentures exceeding 50 crore. All the 3 data have to be seen on 31st March. However, unlisted company, which is joint venture, wholly owned subsidiary, dormant company, they are automatically exempt. Joint venture, wholly owned subsidiary, dormant company, they are automatically exempt if you are an unlisted company. Okay. Now in the committee, how many people will sit? Sir, minimum 3 directors will sit. How many directors? Minimum 3 directors. And majority should be independent director. Minimum 3 directors, out of which majority should be independent director. Boss, minimum 3 directors, out of which majority should be independent director. Minimum 3 directors, out of which majority should be independent director. Then majority of members of audit committee should be able to read and understand the FS. Majority of the members of audit committee should be able to read and understand the financial statements. So minimum 3 directors, out of which majority should be independent. Those majority of the members of audit committee should be able to read and understand FS. The auditors and KMP of a company shall have a right to be heard in the meeting of the committee when it considers the audit report, but they shall not have any right to vote. Audit committee people, you come sit, auditor come and sit, KMP come and sit. You have a right to be heard at the meeting, but you cannot vote. Because who will vote? Audit committee members will vote now. Auditor, you come and sit. KMP, you come and sit, but you can't vote. Logical na? Who will vote? Audit committee ka member will vote. Then, in case of a company covered under this was required to appoint a higher number of independent directors due to company's composition of audit committee, such higher number of independent directors shall be applicable to it. Now, you will always say section 177 or independent director, whichever is higher. See, for example, I'll be teaching in appointment wala chapter where there we have a requirement of independent directors. Okay. Here we say minimum 3 directors, out of which majority should be independent. So 3 directors are there. 3 ka 2 would be independent, right? So as per audit committee, only 2 IDs is required. But as per some section of 149 subsection 4 it is, there we will learn. Again, I'll come and teach you this concept. There it says minimum 3 independent directors required. So what will you say? So 3 independent director or section 177, whichever is higher, such higher number of ID shall be applicable, because if you appoint more, this requirement also gets fulfilled now. So you will say 177 का audit committee का independent director 177 or independent director whichever is higher. Please cancel this. This is removed. Please cancel this. Now, a company which ceases to fulfill any of the 3 conditions laid as above for 3 consecutive years, it shall not be required to comply with this provision. That means you are exempted till you meet the criteria. So, where a company ceases to fulfill any of the 3 conditions laid as above for 3 consecutive years. So, if you are not fulfilling these 3 conditions for 3 consecutive years, then you are exempted from audit committee. Functions of audit committee. Now, what are the functions? Sir, I told you they are not a new people, they are not outsiders, they are only from the committee of directors only. Okay? So, what is their job? Basically, director का job है. Sir, recommendation for appointment and fixation of remuneration of the auditors. Then, valuation of undertaking or assets of the company, evaluation of any related party transaction, evaluation of any internal financial controls and risk management, examination of the FA, scrutiny of intercorporate loans, evaluation of the use of funds raised through public offer. So, whatever the powers of board of directors, same powers of the audit committee. Vigil mechanism. Now, vigil mechanism, you can mark that as important. Every listed company and company which is prescribed below. Every listed company means which is listed on the stock exchange, okay? And companies prescribed below, which companies which accept deposits from public, companies which have borrowed money from bank and FI in excess of 50 crores. Every listed company and company which is prescribed below. Prescribed below, there are 2 companies which have accepted deposits from public, they have not given the amount. Or companies which have borrowed money from the bank and public financial institution in excess of 50 crores. Okay, what they have to form? They have to form a vigil mechanism department. Okay, consisting of employees and directors who will be using vigil mechanism. They will have a direct access to the chairman of audit committee or director appointed, as the case may be. So, in case audit committee is applicable, so they will have a direct access to the chairman of the audit committee. If chairman is not there, then a director who is appointed to oversee the role of vigil mechanism. In case of repeated frivolous complaint, that is false complaint, serious action will be taken, including the reprimand. So, vigil mechanism is important for a listed company and every company which have accepted public deposits or which have borrowed money from bank or FI in excess of 50 crore. So, it is basically in case of employee fraud happening. So, employee will not go and inform to the outsiders, but they will start informing to the department. The department is called vigil mechanism. So, they will have direct access to the chairman of audit committee if audit committee is there. If audit committee is not there, to the person who is appointed, like the director who is appointed, he will be responsible. So, if you saw some fraud, you go and inform to that particular person. Sir, penalty. Audit committee was applicable, vigil mechanism was applicable, but you have not found. How much is the penalty? 5 lakh, officer 1 lakh. Company 5 lakh, officer 1 lakh. Company 5 lakh, officer 1 lakh. Company 5 lakh, officer 1 lakh. Okay. Now, rule 6 say it is only a read answer, very rare in your exam. It's for more of a practical life. The next 2 sides are of practical side, but still I'll teach you. Omnibus approval ka means it is basically a blanket approval. Omnibus approval means like blanket approval. You must have seen that Omni car, which is used in kidnapping in movies, that white color van. Like so many things come, right? So Omni basically means so many transactions, one approval. So all the transactions of related party requires audit committee approval. It is mandatory. So what can audit committee do? See, like for example, they want to purchase from related party, you require audit committee approval. They want to sell, you require audit committee approval. Again, they want to purchase, audit committee approval. So rather than taking again and again approval, it's better you take an omnibus approval. It means a blanket approval. So the audit committee shall, after obtaining the approval of board of directors, will specify the criteria for making omnibus approval. Like for example, 100 crore ka transaction. So max value of transaction aggregate which can be allowed. So we are saying 100 crore rupees. In a year we are giving approval up to 100 crore rupees. The max value per transaction. So total transaction in a year 100 crore rupees ka. Per transaction we can say 10 crore rupees ka. Maximum value per transaction is 10 crore rupees. So we can make a rule. It is just a practical life ka thing. Then the extent and the manner of disclosures to be made to the audit committee at the time of seeking omnibus approval. With whom you are doing a transaction, name of the person, what time, what is the value of the transaction, all those details we will give. Review at such intervals as the audit committee may deem fit. Then transaction which cannot be subject to omnibus approval. This 5 transaction we will not give omnibus approval. Then audit committee shall consider the following factors while specifying the criteria for making omnibus approval. How much is the repetitiveness of the transaction, justification or the need for the omnibus approval. The audit committee shall satisfy itself for the transaction of repetitive nature. See, in a year 365 days are there. Every time you want to buy raw materials from a related party. So other than going and again taking approval, it's better you take omnibus approval. That's the repetitive nature. Now, the omnibus approval shall contain the following: the name of the related party, the nature and duration of the transaction, the max amount of the transaction, indicative base price, or any other information. This can be a question in the exam. Now, where the need of related party transaction cannot be foreseen and aforesaid details are not available, audit committee may make approval for such transaction subject to the value not exceeding 1 crore rupees per transaction. So for example, the audit committee is not justified. Okay, they are saying that you are doing time pass here. But if the transaction of 70 lakh rupees, 80 lakh rupees, so they can give directly approval, not exceeding 1 crore rupees per transaction. Omnibus approval will have a period of 1 financial year. It will have a validity of 1 financial year. 1 year over, again you take the approval, and shall require fresh approval after the expiry of such financial year. It shall not be made, omnibus approval shall not be made for transaction in respect of selling or disposing of the undertaking of the company. That is a prohibited transaction. For that you can't take omnibus approval. Understood? Omnibus approval. Now, section 178. It says nomination and remuneration committee. How do you remember? 178 nominate. 178 nominate. So applicability is same as section 177. Listed company, unlisted public company. Capital, turnover, loans. 10, 100, more than 50. Then joint venture, wholly owned subsidiary and dormant company, you are exempted. How many people will sit? Minimum 3 or more non-executive director, out of which not less than 1/2 should be independent. Not less than 1/2 means minimum. There it was majority should be independent. यहाँ भी 3 था, majority independent. यहाँ पर minimum 3 non-executive director, out of which minimum half should be independent. Minimum 1/2 should be independent. The chairman of a company cannot be the chairman of NRC but can be a member of NRC. The chairman of the company cannot be the chairman of NRC. The chairman of the company cannot be the chairman of this committee, but they can be a member of the NRC. Then the chairman has to attend the general meeting of the company. If chairman has not attended, then any other member can come and attend. Okay. Now what is the rule? NRC का rule क्या है? To identify the persons who qualify to become the directors and can be appointed. Recommend to the board the appointment and removal of directors and specify the manner for evaluation of performance of board of directors. Formulate the criteria for qualification, attributes, recommend remuneration policy of the directors, experts and KMP. Now in case of contravention, same penalty. Company 5 lakh, officer 1 lakh. Company 5 lakh, officer 1 lakh. Company 5 lakh, officer 1 lakh. Section number is what? 178. 178 nominate, nomination remuneration committee. Cool. 177 is little important as compared to 178. But yeah, 178 can also come. Just remember minimum 3 directors, out of which minimum 1/2 should be independent. There it was majority should be independent in audit committee. Last part again a practical circular. Just write here 1. This is second point. This is third point, and draw a line like this. It is only for practical, very rare in the exam they will ask you. If transaction is a 188, that is related party transaction, mandatory require audit committee approval. If it is other than 188, Audit, if audit committee is not approving, what they can do, they can recommend it to the board of directors. Hey, board of directors, please see to it. If it is related party transaction, mandatory audit committee, you have to approve if audit committee is there. Okay, if audit committee, if it is not 188 related party ka transaction, okay, then an audit committee does not approve, then they can recommend it to the board of directors. Then any transaction, whether 188 or whether not 188, if it is more than 1 crore ka amount, no rules have been prescribed. But if it is less than or equal to 1 crore, that is maximum 1 crore, then, and it is entered by the director or officer without audit committee approval, it should be ratified by audit committee. If it is not ratified by audit committee within 3 months, it is voidable at the option of audit committee. Audit committee can accept it also, reject it also. And if the transaction is a related party to the director or authorized person, then director shall indemnify the company against such losses. If it is less than or equal to 1 crore and entered by the director or officer without audit committee approval and not ratified by audit committee within 3 months, it is voidable at the option of audit committee. Please underline this, voidable at the option of audit committee. Practical life transaction, you can ignore this. Nothing above is applicable to a transaction between holding company and subsidiary company. Holding subsidiary company, if you are doing any transaction, all these rules are not applicable to you. Next. The next 3 paras are for SRC. Right there, SRC. SRC. SRC basically means Stakeholder Relationship Committee. Stakeholder Relationship Committee. So the board of directors of a company which consists of more than 1,000 shareholders, or debenture holders or deposit holders or any other security holder, more than 1,000 shareholders, deposit holders, debenture holders or other security holders at any point of time during a financial year shall constitute SRC. SRC means Stakeholder Relationship Committee of a chairperson who shall be a non-executive director and such other members as may be decided by the board. So it shall consist of a chairman who shall be a non-executive director, chairman, non-executive director. So 1,000 shareholders, more than 1,000 means 1,001. So if you have more than 1,000 shareholders, debenture holders, deposit holders, other security holders, you require Stakeholder Relationship Committee. The Stakeholder Relationship Committee shall consider and resolve the grievance of what? Of security holders. Shareholder, you have a problem. Debenture holder, you have a problem. Deposit holder, you have a problem. We will resolve it. So the SRC shall consider and resolve the grievance of security holders. Then the chairperson of each of the committee considered above, or in his absence, any member of the committee authorized by him shall attend the general meeting of the company. So the chairman should come and attend of the SRC, who is a non-executive director. If chairman is not coming, then any other member can come and attend the meeting of the company. This is about SRC, Stakeholder Relationship Committee. Easy, very, very, very important. Very important. Cool. So you will read 177, 178, full answer you will read from the book. Start reading. Works? Cool. So we have done 180 today, we have done 177 and we have done 178. Now we are doing very easy sections. Let's quickly recall the section number. We started with 173 frequency, 174 quorum, then 175 resolution by circulation, then we did 176 that is called as defective, then we did 177 that is audit committee, then we did 178 nomination remission committee, 179 powers of board, then we did today 180 restriction on powers of board, 181 charitable contribution, 82 national defense fund, political contribution, 83 was national defense fund. Okay. Now we are doing easy sections 192 and 193. So 192 says restrictions on non-cash transaction. Restrictions on non-cash transaction. Money not involved, goods involved. So for example, if a company is there, AB Limited, if it is entering into a transaction with Mr. AB, the director, okay, and director is giving services to the company, so the company will give money, correct, company will give money, but here company is not giving money, company is giving what? A car. When company is giving car, it is called as what? Non-cash transaction. What it is non-cash transaction. So it says a company, if it is entering into a non-cash transaction with the director, company entering into a non-cash transaction with the director, usually it is not allowed, not allowed, not allowed, not allowed. What we will say, usually it is not allowed. But if prior GMR is passed, then it is allowed. So GMR means general meeting resolution. GMR means what? General meeting resolution. So a company, if it is entering into non-cash transaction with the director, usually it is not allowed. But if GMR is passed, then it is allowed. If GMR is passed, then it is allowed. Notice should be given to the members that we are passing a general meeting resolution. This is the director, this is the value of the car, this is the remuneration, and we are giving him this particular thing, giving the particulars of arrangement and the value of asset which is valued by a registered valuer. Then if section 192 is contravened, sir, what will be the contravention? GMR not passed, the contract will be voidable. What will you say? Contract will be voidable. The company can accept it also, company can reject it also, unless the restitution of the money no longer is possible and the company is indemnified. So restitution means bringing back. Imagine the car is destroyed. The car is destroyed, then the contract will become what? Void. Generally they have option. Either it is valid or either it is void. But here, if the restitution of money, imagine the resolution was not passed, company gave the car to the director, director was driving the car, and that car met with an accident. Insurance company indemnified the company. Insurance company indemnified the company. So the restitution of money no longer possible, the company is indemnified. The company is what? Indemnified. Then the contract will become void. Generally it is voidable, but in this case it will become void. Here, any rights acquired bona fide for value. That means imagine if Mr. AB sells it to Shah Rukh Khan, So AB Limited gave car to the director sold it to XYZ, and they have contravened. So XYZ will not return the car, therefore the contract will become valid. Because if the third party have bought the car in good faith, so he will not return the car. Imagine if you are in place of XYZ, will you return the car? No. Company went to you, sir, please give us the car back. You will say, I bought it from AB. You take it from AB. AB says, I sold it to XYZ. XYZ has given me the money. So car will not come back. In that case, a contract will become what? Valid. In that case, a contract will become valid. Generally, it is voidable, but in this case, it becomes void. In this case, it becomes valid. Section number is what? 192 non-cash transaction. 192 non-cash transaction. There's a restriction. There's no prohibition. That means it is allowed, but what you have to pass? GMR you have to pass. What you have to pass? GMR you have to pass. Okay. Read 192. Done 192. Now 193. 193 OPC. What will you say? 193 OPC. 193 OPC. If an OPC enters into a transaction with a sole member, okay, see, understand, company is separate, member is separate. Solomon versus Solomon. So if the OPC enters into a transaction with the sole member, it's sole member. If it is in ordinary course of business, no approval is required. However, if it is not in ordinary course of business, then it has to be in writing. If it is not in writing, you will prepare a memorandum. Memorandum basically means contract, and that such contract should be informed to ROC within 15 days of the approval of board and should form part of the minutes of the board meeting. So for example, AB, OPC Private Limited entered into transaction with AB. Imagine if he is buying tube light. So tube light is an ordinary course of business. They are doing the business of tube light only. So nothing is required. Nothing is required. Imagine if they get into a rent agreement. So AB giving his property to the company. So if they get into a rent agreement, this rent agreement ka copy should be informed to ROC within 15 days of approval of board and should be formed part of minutes of the next board meeting. So you need to present it to the board. Board will approve it, inform it to ROC within 15 days of the approval of board and shall be made part of minutes of the next board meeting. So this is section 193 OPC. What is ordinary course of business? It will depend upon the business of the OPC. Okay. Read. Clear? So 192 is restriction on cash transaction, 193 is OPC. 94, 95 has been deleted by the government only. Those two sections are not there. Okay. Now, section 190, very small section, contract with MD and WTD. 190 is what? Contract with MD and WTD. A company who enters into a contract with MD, WTD. Okay. Every company, when they're appointing a MD means managing director, WTD means whole-time director. Okay, they will enter into a contract with them. If no contract is there, then a return memorandum. Memorandum basically means a contract, appointment letter. That contract should be kept at register office and it shall be kept open for inspection by the members without payment of fees. So member can come and inspect this. It is not applicable to private company. This section is not applicable to private company because private company mein MD appointment is not mandatory. If appointment is only not mandatory, then the contract will not be there only. Na? Contravention. Company liable for 25,000 rupees, officer liable for 5,000 rupees for each default. Company liable for 25,000, officer liable for 5,000. So if a company enters into contract with MD, that contract ka copy. Contract is not there, a written memorandum should be kept at the registered office. It shall be open for inspection by members without any fees. Not applicable to private company. Penalty is 5,000 for the officer, 25,000 for the company. 5,000 for the officer and 25,000 for the company. Section number 190. Very simple section. Read. Finish. 190 is contract with MD and WTD. Okay. So in this session, what we have discussed is so we did 190 contract with MD and WTD. Then we did 192 restriction on non-cash transaction. Then we did 193 OPC. 193 OPC. Okay. Now balance section we'll be doing in the next session. I think more 2 classes will be there. Then this chapter will be over. I hope you are having a conceptual clarity. All the pointers what I am saying is very, very, very important. You need to mark it out so that you remember it again and again. I am recalling the section number because it will be helpful in your objective wala part. Okay. So in the next session, we're gonna complete the lengthy section. There are 3 big sections: 85, 86, 88. I think that those will take one separate class, and then other balance section will take one separate class. That will continue in the next class. Okay. Bye guys. Take care. Enjoy and aim for a rank or 70 plus, whichever is earlier. Bye guys. Take care.